Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Let's take a look today at the Canadian dollar, because on the euro currency we have nothing special. Market stands approximately in the same area where we have left it yesterday, but Canadian dollar gradually are coming to our major target. So recall that our monthly analysis suggests that market should hit an area around 134.25. This is the major ABCD target on the monthly chart. And you could see that the butterfly that now is forming on the daily chart also has the same destination points. 1618 extension of this large big butterfly stands precisely at the same area. This purple line is the monthly target. It stands in the same area, somewhere around 134.05, 144.10. So, but monthly chart shows that this should be somewhere around 134.20, 25. So this doesn't matter. In fact, what doesn't matter is that market is approaching to this target, and right now it has not bad chances to hit this target on the current week if we assume that the employment data will help us a bit. So maybe ADP report, maybe non-farm payrolls release will provide us not bad data, and that could push this currency pair to the upside and Canadian dollar directly to the downside. Market could hit 134.25 area. Right now you could see that market has turned to some narrow channel that it stands for since the beginning of the August, when the market has completed 127 extension. Then we for some time have abandoned the Canadian dollar, since we have found more interesting setups on the euro currency and on other currencies. But right now, as euro currency stands flat, we could return back to discussion of the Canadian and to see what really is going on, and maybe we could use some opportunities for trading here. So market has turned to the narrow channel, and we will expect for hitting of this target. On the 4-hour time frame chart, guys, I would like to attract your attention not even to the multiple butterflies that you could find here. So you probably remember that here was our first butterfly that we have discussed. Later, right now, market has formed another one butterfly right here. Here we could get another one. But what is more interesting for us is not the butterfly by itself, but the way how market shows the retracement. Take a look. That's a bit special retracement on the Canadian dollar, because it takes the shape of the widening triangle. So here we have the widening triangle. Okay, that later has turned to the butterfly. Market has shown upward action. Here again we have another widening triangle, but this one will be probably the last one on the road to the target, because take a look. The 127 extension of this most recent retracement, let's assume that later it also will shift to the butterfly. It's very probable. Anyway, the 127 extension of this most recent retracement has the targets 134.10. That coincides with the target of the big butterfly and coincides with the target of the monthly chart. In this case, you could ask where we could, for example, take the long position if we would like to get right there. In this case, I suppose that our major resistance will come and should come from the trend line support. The market stands within a month. Every time when the market hits this level and shifts to the butterfly shape, it bounces up and jumps up right from this line. So somewhere, something of that sort probably will happen again. At least right now we don't have any other beacons or patterns that we could rely on. So only this trend line support. Also, it approximately will coincide with the monthly pivot point. You can see that market right now stands above the monthly pivot point. It's also a good sign for the possible upward action. Also, guys, so that's been said from the technical point of view. If you would like to make some scalp trade on the Canadian dollar, you probably could watch for its development. So here we again have the widening triangle compared to this one, and you just need to wait when market will reach again this line where you could try to take the long position with the final target is 134 area. So that's the short-term setup that could be achieved on the Canadian dollar. There is another reason why we think that this scenario is possible, because if you take a look at the crude oil chart, you will see the market right now stands on the perfect Brent body sell on the daily. This Brent body looks absolutely tremendous. So you can see that thrust down, perfect thrust, very strong, no significant retracements within the thrust. Three calls above the 3x3, 1, 2, 3. Market has hit the 50% resistance of the whole thrust down. Sell signal has been formed, and on the next day market is forming the huge bearish engulfing pattern. And right now market stands in the minor retracement here. That corresponds to the minor retracement down on the Canadian. So take a look at the Canadian 4-hour time frame chart. Market right now stands in downward retracement. So it seems that when the market will hit this trend line on the crude oil chart, market should finish the upside retracement right back inside of the body of this engulfing pattern. You know that's a common action when the market forms the engulfing. On the next candle, it in the most cases forms minor retracement back inside in the body of this pattern. Okay, that will be probably the moment where you could take the long position on the Canadian currency pair. And if you trade the crude oil, you could try to take the short position here on the crude oil, because the minimum target of this pattern of the Brent body setup is 42.60. This is the futures price, guys. It's a bit different compared to the spot market. This approximately corresponds to, if you will, you should add approximately $5 to get the correct spot price. So on the Brent crude oil, it's approximately 46.50, 47 it will be. Anyway, based on this chart, that will be the minimum target of the Brent body, but it doesn't mean that market should stop here. It could show a bit deeper action. So here, for example, engulfing, if you will measure the length of the candles and count it to the downside, it should lead you even to the lower target. Okay, the Brent body is also sometimes becomes the triggering pattern that will be the trigger the continuation of the further action to the downside. So crude oil could continue to move lower and taking out of these lows. The Brent body is just the trigger, but that has the minimum target, but it's not necessarily mean that market will stop definitely here and turn to the upside again. That's just the minimal level that market should reach based on the Brent body. But right now already the bearish engulfing on the crude oil suggests that market should continue moving a bit lower. So that corresponds approximately to what we would like to see and would like to get on the Canadian dollar. Since this pattern suggests the crude oil should fall, it means that Canadian dollar currency pair should rise, and probably it will let us to reach the target on the Canadian. Also, guys, we have no objection if you would like to trade particularly this pattern. Don't be upset that you haven't taken the position right here. Upward retracement on the crude oil provide excellent opportunity for taking the short position with the reasonable stops. So that's our current view. We think that the current situation on the Canadian dollar and the crude oil is more interesting than we have right now on the euro currency. That's why today we have dedicated the time and the video research to these currencies.